Hello YouTube world, and I'm here with my brother,
Hi guys.
and we're just showing you a few pickups after a very busy week in the market, so you guys can imagine, which we'll get into later. So I'm just going to show you guys a few pickups which we've got in gold actually. We're actually trying to, we have a 10%, oh is it 10% gold?
Yeah, it's a 10% gold ratio we tried to keep. The thing is, silver's been so low, we've piled up in a lot of silver and everything's gone a bit
Out of kilter.
out of kilter, yeah. So we need some gold, platinum, palladium.
That's it. So what have we got here?
We've got a few pieces of gold. This is a ring. I think you know a bit more about this ring.
Yeah, it's a sovereign in classic Del Boy fashion. If you guys remember Del Boy, if you watch Only Fools and Horses, the classic Del Boy ring. But the bale, actual ring itself is 9 carat, but it's got a 1/20th ounce Isle of Man angel coin in the middle, which is 999 pure gold, 24 carat gold.
I love the big ones of those.
That's right. So this ring altogether is just over 2 grams of pure gold, including the actual ring itself. So that's our first piece. Put that back. Okay. We've got a few small coins here, sort of more the fractional stuff. And we've got a half sovereign.
1912, that is.
Yeah, 1912, is it?
Yep.
All right, 1912 half sovereign there. And this is the back end.
King George.
I think it's a 1914 King George in the back. And these are 3.66 grams of fine gold they contain, but they weigh, I think, 3.99 grams.
Yeah.
But they're 22 carat, so they contain 3.66 grams of pure gold.
Cool.
All right. Moving up to the next. We've still got a wobbly table. We haven't advanced that far.
Too busy.
Next up are 1/10 ounce. These are just 1/10 ounce Britannias.
Yeah.
And these are, so it's 3.11 grams of pure gold in these bad boys.
Yeah, you can actually see the colour difference. It's noticeable, isn't it? It's more yellow than
No, so it's
more
gold's the
yellow
natural
than
colour.
the half
You
sovereigns.
can see that that's the copper in those sovereigns giving it the brown colour, which is leading us on nicely to the next, which is the Krugerrands. And these are 22 carat gold.
Yeah, they're almost like copper piping colour.
That's right, they are very copper in colour, but these are 1/10, so they contain 1/10 of an ounce, 3.11 grams. And that's the front end, and that's the back end with Paul Kruger on it. And moving on to our next ones. Actually, these are actually just 9 carat.
Yeah, tiny.
So
coins.
this is from the Windsor collection. This is a 9 carat coin.
They really, I think they were quite expensive, and but they were 9 carat gold. So
Yeah,
if you're paying spot for it, might as well grab hold of it and
might
shove
as
it in the
well pick
pile.
out. And again, that is another 9 carat coin, which is in a similar fashion to a sovereign or a half sovereign. That sort of quarter sovereign look to it there, but that is a 9 carat coin. Okay, guys, we'll just move on to the next bits. Okay, next up is the Valcambi 2.5 gram. So these are just bullion, little bullion round. It's 2.5 grams of 24 karat gold, and it comes in a little case. Again, these are picked up. All the stuff we've got is mostly just around spot. Maybe a few pounds over here and there. Not a great deal. This is a 2.5 gram round. And then next up is the Pamp Swiss, and this is again another 2.5 gram bullion bar. And it's in a new card. You guys might have noticed the new VeriScan cards where you can scan the bottom of the card, and it takes you straight to the Pamp website to let you know what this bar is in terms of the dimensions, etc. I mean, I'm not sure if that can be sort of replicated. I'm pretty sure that would be pretty easy to replicate.
I think in time there's pretty much nothing that can't be replicated. So any security features just for that moment in time.
It's nice and square, I suppose, for now. Okay, and next up is same as the first one, but instead of a round, it's a bar. And I picked this I think it's just right on spot. This one, if you can see on the bottom, there's a little red mark there, which is something to do with copper. I can't exactly remember what it was, but sometimes gold gets a little red, can get little red marks, and it's something to do with copper. If you guys out there know or remember what that is, I'm trying to talk about, if you could let us know in the comments. But
the other side of these have little roses on them.
Little roses, yeah.
Yeah, so maybe at the end we'll spin them the other way around so you can see the other sides.
That's right. So that's the next batch. I'm just going to show you another 2 more small bars. Okay guys, next up here is just a 1 gram but it's in a nice little case. And again, the dealer we have, he gets these sort of certi card, 1 grams, small fractional sizes, and charges a really good price. So I don't think you can go wrong. That's by Degusa. So it's D is Germany, the GU is for gold, and the S is for silver. So it's basically German gold and silver. And that's what Degusa is. And it's fine gold, it's 1 gram, 999. So it's a typical 1 gram fractional bar. Next up is one of our regular companies.
See the camera nicely in the background?
You guys are used to this. We've shown quite a few of these. This is Baird & Co. And this is just a 5 gram bullion bar, again pure gold, or 24 carat, 999. Bullion bar, and it comes in its little certi card, which is lovely. Okay guys, we're going to move on to the next few pieces. Okay guys, these are the next 2 pieces. These are just 1 ounce bullion bars. Again, you guys know, like the bank stuff. So these are from UBS. Used to be the Union Bank of Switzerland, merged with, well, I can't remember who they merged with now, but this is UBS, and these are their standard bars. These are kind bars. So on the back of the bar, you will see a hologram, which is a security feature. I'm not sure if you can pick it up there.
No, you can't really see it through the camera.
Right, I think you can see the 3 keys.
Yeah.
Basically, if you move it around, you can see oranges and purples.
Real rainbow colours.
That's a security feature. So these are just 2 1 ounce pure gold bars. They're actually consecutive number, which is
they've got the serial number and the hologram on it. It's pretty cool.
That's it. Nice little weight to them. But again, if you guys seen regular 1 ounce bars, you'll know what sort of size these are.
All too familiar.
That's right. Okay, just moving on to our last piece, and then we'll have a quick chat. Okay, guys. The next one here is the Austrian 4 ducat, and this is a bullion coin, a restrike bullion coin. If you notice in the top corner it says 1915, it's more than likely isn't from 1915. I think all the bullion coins, the Austrian ones, the 1 ducat and the 4 ducat are all stamped 1915, but they're still made today. So I mean, this could be 2015 really. So it's got no numismatic value, but it is bullion, and it's a strange carat. It's just over 23 carats. Or 98.6% pure. So
I think they're so cool because they're so big.
They're so big.
They are thin, though.
That's right.
Real thin.
Very thin. This is a 13.9 grams altogether, but fine content is 13.7 grams. So it's just shy of half an ounce altogether. But I've got a little silver eagle here just to show you guys a comparison in size. And I mean, you can see its diameter is actually...
Can you put one on top of the other?
I think the diameter is actually about the same as a silver eagle.
Yeah.
It's about the same as a silver eagle, but if I turn it sideways, you guys can... Well, you can't really see it. It's that thin. Let me just separate them so you guys can get a better look. And that's the diameter. It's very, very, very thin. And on the back end, that's the other side of it. So that's just another pickup, just under half an ounce. And okay, guys, we'll jump out and have a little quick chat. Thank you.
So, guys, we're back here now. We're just having a chat about the markets, and it's been an absolutely volatile week this week.
Really volatile. I think the VIX, the volatility index, it broke records. It was up and down, up and down. It was crazy. You know, you started seeing it on, I think it was Wednesday of last week, with the Dow Jones starting to fall.
Yeah.
And then Thursday again. And then Friday had a big sort of 400, 500 point sell-off. And so during the weekend, you knew Monday was going to open really, really low. I don't think anyone expected it to be quite as low. I mean, it hit... It hit 1,089, I think, negative 1,089, nearly 1,100 points down.
So that's a record.
It is. The record before that was 2008 when it was 777 points down a day.
I think it's amazing though that if you watch the mainstream media companies, their attitude towards it. I think the Dow, when it dropped half of the amount on the first day, people were saying, "Well, this is a great buying opportunity."
Yeah. I love the American accent.
I do. It's pretty
great.
It's a great salesman accent. The problem is, anyone who listened to those guys that day and went in and bought, it dumped again the same amount the following day, which is really unfair.
It is.
Do you know what I mean?
But again, guys, if you guys watch CNN, Bloomberg, CNBC, these channels are the equivalent of a car showroom. Yeah. I remember there was a friend who was buying a Porsche. He was buying a new Porsche, and in the newspapers there was articles about the Porsche engine exploding. sort of people getting in really
Yeah.
bad crashes. But when he went there, I mean, the salesman never mentioned anything to do with that. And once you get in that showroom and you see all the shining, gleaming
Glitz
cars,
and the glamour.
you think, yes, I have to do this. Which is the same as the Bloomberg channels. Any positive news, they will pump heavily.
Yeah.
Any negative news will be pushed right to the sidelines, and it will just be constantly buying opportunity, guys. Look at this stock; it was 7% higher 2 days ago. Jump in on this, get in. But it's dangerous. This is a dangerous time.
The guys probably want to know as well why we've got gold at the moment, or why we're
yeah.
up in the gold. But the reason is the price of silver was really low, so our silver holding has gone up massively, and we like to keep 80% silver, 10% gold, 5% platinum, 5% palladium.
Yeah.
And at the moment, it's gone completely skew with because our silver holdings has gone through the roof.
Yeah. Need to catch up on the others.
That's right. I think it's actually going to be a great idea having now more than ever. I think it's going to be a great idea to have hard assets.
It is.
Just because it's terrifying to look at. And I mean, I've been going through the graphs and the paperwork. It looks like 2008. Again, in 2008, the markets didn't just crash and drop through the floor.
I think that's what people remember. People seem to remember it as there was one straight red arrow pointing downwards.
No,
and that wasn't the case.
You had green days, positive days, and negative days, but the trend was downwards.
That's right.
It looks exactly the same now if you look at the graphs of at the moment.
Yeah.
The only difference is our debt is far, far higher.
Yeah, and the Dow Jones, you have to remember, guys, a lot of the reason there's so much money and the reason the Dow Jones has gone sort of from 6,000 to 16,000 or 18,000 even nearly was because of the interest rates. The interest rates were so low. So, I mean, let's face it, the majority of people who have cash available to them are older people who have worked hard all their lives.
Yeah.
Now, those older people used to have their money in bank accounts, but those bank accounts are paying virtually nothing.
Yeah.
In some countries in Europe, they're negative.
Yeah.
So you're not going to keep your money in those bank accounts. What you're going to do is look for a way to put your money to work. Yeah. So the best way at the time was a stock market because it was just going up. So obviously, instead of having my money in an account and having to pay money to keep it in there, I can now put it in and buy shares, buy equities, and watch my money increase, which is great. But I mean, a lot of these people, it's kind of like China. There's not a great deal of experience with investors, even with pensions. I think in America you've got 401ks, and you put your money there to put it to work to try and increase it as much as possible. But with this situation, people are nervous. And again, remember, if you're approaching retirement age, this is not the time you want to gamble. People think, well, you know what? I've made good money over since 2008, last 7 years. I've made decent money. I'm pulling my money out because it's just not safe at the minute.
And I would also, guys who have things like 401ks or investments, and I would definitely talk to your broker or your trader and really ask a whole load of questions as to what you're invested in, what the market outlook is.
Yeah.
Now, their job is to keep you there. Their job is to give you the positives.
Yeah.
But you've got to look at negatives, write down bullet points, and go to them with the negatives and see what they're saying.
Yeah.
Because it's your money, and if you work really hard for it, it shouldn't just be... Because honestly, it's going to go to pay for lovely sports cars for some people. Because some people will do very well from this whole situation.
Absolutely.
As is always the case.
As is always the case. I mean, you think last week putting basically Facebook, saying that Facebook was going to lose its value.
Yeah.
It's sort of... it made a lot of money. There was a lot of money made in Facebook, just the price crashing off and then coming back.
Yeah.
You made money on it going down, and you made money on it coming back. These are futures trading, guys, if you guys know futures trading. And, I mean, there's a lot of money to be made like that. But for your average person who is basically in the stock market just to get a bit of interest, basically, instead of keeping it in the bank, this is all too much. It's almost too much of a wild ride.
So, in the whole economy, there's several different things that cause me, as someone who likes trades, I only know the banking world since I left sort of school and college. So that is what I know. So for me, I've seen some of the scariest things I've seen in a while. I think the volatility, the intraday volatility, especially in the Dow, to make the Dow move that many points.
This is where Elliot puts his tin hat on.
My tinfoil hat. Yep, I'm sorry, I have to, but I have to say it. I do believe that perhaps central banks are behind purchasing of shares. Now, they'll do it through another company or through other companies, but those swings that I saw last week, from a massive sell-off to a massive rise, to make the Dow move that much, it's not, here's a tenner, that'll move it, here's a 20 quid, even 100 quid. You are talking about a phenomenal amount of money. And to move that much in half an hour, there's only one type of person that has that kind of money, and that's a central bank.
That's right.
So in my opinion, while the Chinese that come out and say, my goodness me, we're the government and we're throwing everything in the kitchen sink at it, our governments in the Western countries, they'll just do it underhandedly, behind closed doors, but they're still doing the same thing.
That's it.
And then the other thing that should worry everyone, whether they think it will or it won't, just like they said before, China's got nothing to do with us, it won't affect us.
Last week, Bloomberg, CNN, CNBC, they were all saying, China. They don't know. First of all, there's a bunch of kids trading on the market. Secondly, the communist government doesn't have a clue about how to deal with money. It's got nothing to do with us. We're strong over here. I mean, by the next morning, our market's crashing, plunging.
Yeah.
So, take what they say with a large pinch.
I think we might have mentioned that in one of our last videos. That, listen, I know they're saying that China has nothing to do with us, Greece has nothing to do with us. It does. And remember this, guys, the stock market reflects the economy.
That's right.
Not the other way round. Okay, so people are like, oh, the stock market's going to cause the economy to crash. No, the stock market is, all it's doing is reflecting the economy.
Yeah.
If the stock market starts to do what it's doing now, you need to look at the economy and know there's something. There's something truly going wrong.
That's what historically a stock market's supposed to do. I mean, back in the day, it was literally a stock market for animals, cows,
cattle, a market.
If the market was low, there wasn't much milk. If there wasn't much meat, there wasn't many cows. It reflected the economy.
Yeah.
Nowadays, people tend to say, "Oh no, the stock market's crashing. The economy is going to fall apart." That's not how it should work. Although nowadays, with the quantitative easing, the trillions of money produced or currency produced, it seems to be following that trend.
Yeah. I think on a final point, China owns lots of US
T-bills, bonds,
money in general. What are we looking at? $3.5 trillion?
$3 trillion,
Think about that number. 3.5 trillion. It's massive. No one even can think of what numbers these are. And China needs to back or support its currency. Again, the financial pundits use the term, the Chinese are going to back the yuan with the dollar. They're not going to back the yuan with the dollar. They're going to flog the dollar and get as much as they can for it.
They're going to flog their bonds because the dollar's really strong. They're going to flog their bonds, which they are doing as we speak, hand over fist. In fact, they're selling so many. They're selling via Switzerland and Belgium, and they're quite honest about that.
Yeah.
They're selling their bonds in China via Switzerland, via Belgium, and they're dumping bonds in order to get their hands on very strong dollars. And then they use those dollars.
Meanwhile, the central banks are twiddling their thumbs, scratching their heads, looking at each other with a vague look as to what they should do about it.
Yeah. Oh, what should we do about the interest rate? Janet, we don't know. Some of the other Fed chairmen, if we do, we may put it up by 25 basis points, but because of the market, we might not. While China's been selling those bonds, it's pushed the American interest rate up 37 basis points. So where the Federal Reserve...
So the Chinese are literally moving the market, moving the interest rate by themselves.
Absolutely. So while the Federal Reserve debate whether to put it up by 25 basis points, China dumping bonds has already put up by 37 basis points. So you can see we are very connected. We are very connected. When you watch your CNBC, guys, I'm not saying not to trade because we do trade.
Yep.
I'm not saying not to. There is definitely money to be made.
Especially on things like puts.
Yeah, puts and calls.
What you're looking at now on the camera, this stuff here.
That's right.
That is what you need. You in a time like this, your insurance is looking shinier than ever.
You're glad you had it.
You're going to be glad you had it.
When you're going around the corner in a Ferrari and you start losing control, you think, God, I'm glad I took that policy out.
Right.
It's one of those moments.
It is one of those moments.
But yeah, hope you guys enjoyed the video.
Yep.
And we'll be back with some more. It's probably going to be gold.
And the last thing, guys, with my tin foil hat, let me know what you think as to what was causing those massive market swings in the Dow. I know there are things like the intraday swings. I know there are company buybacks and things like this. Let me know what you think is causing that. It'd be interesting to know. I know there's a few of you guys that are financial guys. It'd be nice to know your opinion, other than CNN and all these guys.
Yeah, I like to take the negative approach because when you're working, I mean, all during the day at work, you'd have CNBC and Bloomberg. That's all that's on the screen, so it's all positive. And in a way, I understand that. They have to be positive. I mean, that's to keep the market going. But when it's your own money, I don't have time for the positivity. I want the real hard story. It's sort of like when you're going to a doctor for news and it's like, doc, just give me Just tell me
Give
what
it
it
me
is.
straight.
That's it. Give it me straight, Doc. That's the situation when it comes to your own money. Because you work hard for your money, guys. So you're out there. You work hard for your money. Let us know as well. Do you guys have pensions? If you guys are in America, do you have 401ks? What do you plan to do? Is your money in the stock market, or is it sort of diversified property?
And how do you diversify your hard assets? Do you have properties, gold, silver? What kind of percentages do you keep?
Yeah.
Do you have things like platinum and palladium, or is that just something that you don't really think about or you're not really too interested in?
Yeah, that's it. I mean, some guys have classic cars.
Yeah.
Which, as over the last few years, that's been a great investment.
It has,
Fantastic.
But I don't know how long there'll be a great investment.
That's right. That's it. But yeah, let us know what you guys are doing. It's really interesting, and what you guys think of the market. And you guys picking up any bits and pieces?
And again, I want to say one last tinfoil hat point.
I'm going to take it off him in a minute.
Listen, an advisor to Gordon Brown, who's our Prime Minister in the UK, here in London, he said...
Sorry, didn't mean to cut you off there.
Yeah.
This is a Gordon Brown who sold gold in 2004 at £250 an ounce.
I agree.
So,
I agree. But this is something that I've been thinking about
for a while. This is only
an
advisor, so don't worry about it.
I have to say, but in the situation that the market was to have a free fall,
yeah,
okay, you're going to end up in a situation like 2008 where liquidity is going to be a big problem.
Yeah, credit
now,
lines are going to tighten up.
Remember that it's not just banks that rely on that liquidity, it's ordinary places, shops, your Tesco's, your Walmarts, your Safeways, Sainsbury's, Asda, whatever you have around the world. They rely on the bank's credit line. If the bank's credit line freezes, they can't do what they do. They can't sell you products. So, here's a tinfoil hat part. Remember as well, before I say this, people laugh at people who hold gold and silver. Okay, so get yourself some foods, tin foods. I know it sounds crazy. Just a little bit. Spend 50 quid. Long life stuff.
Bottles of water.
Bottles of water. Make sure you have a way of contacting people you want to contact, because you just don't know what's going to happen. And just store it down there for yourself. That's it.
Right. Always remember, this is food, guys. You know, you keep it for a while, and if the markets are looking good, things look better, you know, your food's still got a good 2 years left in its sell-by date, give it to a food bank.
Yeah.
It doesn't hurt, you know. Give it to a food bank if you don't use it, but just have it there just in case. Yeah. If a situation does creep up where credit lines are frozen, you could get big companies like Tesco closing for 3 days.
Yeah.
And in that
a week. 2 weeks.
Well, it depends on the situation. It could be that bad. But if it does happen, you know, all your little local corner shops are going to be out of food fast.
Yeah. And the big ones will be out of food.
And the big ones probably won't be open. But, you know.
I do believe that if it does happen like that, the governments will endeavour to make some kind of system up and running very quickly. Yeah. But that's still going to take time. Yeah. So, not to leave you on a glum note.
Yeah. It's all great out there.
Yeah. So, that is what we're saying for now. Guys, again, like we said earlier, mention in the comments any stuff that we've talked about. It'd be nice to know all of your opinions. And hopefully we'll see what's going on in the next week. It's probably going to be another very, very interesting week. Yeah. And we'll talk about it with you as soon as we can. Yeah. Because obviously we'll be quite busy with what's going on as well. Okay?
All right. Thanks for watching, guys.
Okay, guys. See you later.